Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Well, we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what might it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube under the channel L.A. Little. You can catch me there if you miss it here. On any device, pretty much. So be sure and check that out if you need to catch up on some material. As far as these markets, as far as what's going on, actually a programming note just ahead. We will be closed, or no show Sunday night or Monday, so don't look for me there. We'll be back in business on Tuesday after a long weekend. As far as what happened today, as you I'm sure are aware, there was a heat up in the rhetoric, and not just the rhetoric but the actual overt participation in the Ukrainian military conflict, with Russia getting involved. That had markets from Asia to Europe and then to the United States down to start the day. But as is the case with this market, it doesn't want to go down and stay down, especially first time down. So we end up just about 0.25% at the worst. Russell was down the heaviest, 0.75%. But the S&P, down 3%. I mean, 3 points, 0.17. So really nothing. You saw a pickup in gold on the fear. You saw for whatever reason, we saw the sell-off in copper. I didn't really see what happened there. But dollar was flat. But the big thing to me is that this, if anything, this was a day for this market to actually pull back and not rally. You got a long weekend coming up. You have markets that have rallied and rallied and rallied and are stretched. You have this confrontation that's taking place, and now there's talk of more sanctions. Yet the market can't stay down. That, to me, for better or for worse, is telling us that this market really has no concern about anything other than trying to go higher. The dip buyers are in vogue, and they're all over the place. Let's look at the actual ending quotes on the charts and think about what they mean. The first thing you want to notice is that you actually came back in for a second retest regen. Right? So there was the first bar here, immediate retest and regenerate higher, pushes higher. Now you come back again within 6 bars again, and you test again. Odds are about 50-50 when you do something like that. What does it do? Well, after this big long march up, the dip buyers certainly still around, and with there's being no volume, that emboldens them as well. Volume over here 32, volume on the breakout 26, volume on the retrace 23. Not enough volume, can't take it lower, flips around, leaves a long tail to the backside. This thing's going to go back up and try to test the tops. That's the S&P. The Dow, remember the Dow looked a lot weaker when we looked at it last. Doesn't really have any tells today, except for the fact that it wouldn't stay down either. If I move over and look at the NASDAQ composite, all it was doing was coming back into this last kind of thrust higher. Really no tells there, just no volume on the way back, so I don't see any willing sellers at lower prices. INDX itself actually gets under, remember we have a little 3-day doji going on. So the low on this was 40, 58.6, 13.8. You come underneath it, back over it, less volume. This thing's going to try to test the top two. And so each place you look, they want to go back up and test the tops. And if we come back in and we look at the Russell, which has been the weakest, right? You got a breakout over this. The breakout was, actually you had a breakout here as well. So this is a retest regen off of this swing point high breakout bar. That low, 1163.85. Today's low, 1164.11. So it's almost a full retest regen. 228, 274. You don't have the volume. This thing's going to flip around and try to go back up. So retest regens everywhere suggest we're going to go right back the other way. And that's despite the long weekend, where you would think there would be some fear. So when I look at the indexes, I don't see anything that tells me that the fear is going to, pop up tomorrow. Certainly, there was not enough fear today to suggest that they're worried enough to sell tomorrow. And so from my perspective, it looks like this market's going to try to work higher, not lower. Let's go look at where the fear really was today, if it was anywhere, and that's over in Europe. The CACs comes back in. Now, remember the CACs had indicated to us a range trade, and the reason we know that is because we had these swing point lows. It had taken more than 6 bars to get back up there to them, and then it just shoots right through them. Okay, when you see that kind of action, okay, so now it wants to be a range trade. The initial range is here, so I suspect it can come back down and test lower, but it wants the range trade instead of breakdown. So we did not regenerate lower. We get a pushback today. We got a little volume expansion as we're coming back into it. The test here will be the top of this bar, and then if it gets into that bar, then the test will be this bottom in these areas, right? So it would be back down in this area right here. So that's the CACs. Nothing that damaging today. It had a 2-bar reversal already. Now it comes back in off of it, coming back into support. Tomorrow we'll see if it can hold or not. And they don't have, do they have Labor Day? Yeah, they'll have Labor Day as well, right? It's I think that's universal. Yeah, I'm pretty sure, I didn't look it up, but I'm pretty sure Europe is closed on Monday as well. If somebody knows that, you can pop it in the window there for me. So that's that scenario. If we move over to the DAX, the DAX pulls back harder. Now the DAX has been having a harder time because the DAX, of course, is the one that's hit hardest by exports because they're totally export driven. And so the DAX gets hammered, volume expands a little bit. It's coming back into what was resistance on the way up, now should be support on the way back, and that's this little intersection here. It's probably going to get into it in the morning. We'll see how it handles it. This one so far has not come back to do the retest regen off the prior low. It was almost there, didn't quite make it. Did do a 2-bar reversal and reverses off of it today. So the DAX, if you're looking in Europe, the DAX is the one to watch for the larger tail because this one so far hasn't told us range trade. If we look at the FTSE being stronger, FTSE outside of all the nonsense, V-shapes all the way back up, did not quite test that swing point high at 68.33, got up to 68.30, comes off a little bit, but I suspect it's going to go back and test it before it's done. If we pop over and look at Asia, remember the 8 shares, and we had talked about this a couple days, the 8 shares had traded down with volume expansion into this bar and had more volume, right? So that suggested they would come back, yet up, 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 right? That sort of action that we've seen before. And then what they do, they come up, they come all the way up here, they get over this high, 1.47, they do 1.65, so they actually have the volume as they hit it, but they reverse, come down, and today volume expands more. They're going to get into this bar tonight. They're going to try it again. So this will be the test tonight, is what do you do when you come back into this little zone right here? Do you hold? Do you have less volume? Do you hold, or do you come all the way back down? And so to me, that's really the test that's going on. You saw big volume expansion here. That's at the bottom of this zone. This is where, you know, the rubber meets the road. Either this is for real or this was just short covering that has kind of taken on a sideways distribution pattern before it comes back down. And remember, these markets in China, these guys have struggled. I mean, they have been down for a long time. If I pop over to the weekly, and here's the weekly. Well, actually, you need to look at the monthly. Let me pull the monthly over. So here's the monthly. So the markets came down, and they've been down here in this big range for a long time, right? We're talking years now. So this is back to 2011. So if they fell here, you know, and I'm not a classical guy, but that would be 3 lower highs, and in this case, so far, 2 higher lows, or actually a higher low. So as you can look at this, and again, I'm not a classical guy, but the classical guys are going to draw this kind of wedge thing here, right, and show this wedge and say, okay, here's the situation. Whichever way it breaks is going to be the big break. Now, I would think of it in a different way, and that is that I don't need it to break that. I just need it to show more strength on the way down than on the way up to tell me, you know, that it wants to break down. And so if I just come back and look at the horizontal levels, you got a nice big bar up here with a swing point high. You had a nice big breakout with some highs. This area on the way back is the critical area, and once we get deeper, if that's what's happened, this will become a zone, and that's going to be a huge zone, because if you can't hold that, then you're coming back down here again. And so, and you know, I know everybody is aware of the issues in China with respect to the housing market. You know, we went through a housing crisis. They're going through one now. If they can't hold up here and they start to break down again, you know, then you're all the way back, potentially all the way back to 2011 lows. That's a long time ago. That shows you, you know, just how fragile this market remains even after, you know, 3.5 years of trying to get out of the hole. So I think this is a big deal because it's such a huge engine in the world market anymore. And it's a reflection of the rest of the world because they're still export driven. Hong Kong. Hong Kong comes off, looks almost the same. It's into this big bar. The low of it is what it's trying to do. It's doing a full retest regen. That low is 24,912. They're coming into it, don't have enough volume. If they trade under it tonight, again, that makes this a range trade as well, no longer a bullish trade. And those were the main ones. The Nikkei still struggling. You can't really get going. Looks like it still wants to trade a little bit lower. The Taipei market finally gets a 2-bar reversal. Looks like that one's going to come in. The Indonesia market, which has been a very strong one, actually tested into the lows of the highs. Failed on volume, on price. This one's going to come back down again. Probably test into at least this August 7th bar. So, in summary, and I haven't gone through the sectors, but there's really nothing there. We could look at, real quick, we could look at the ox markets, and that will actually be a lead into one of the questions that was texted to me. And matter of fact, if you want to ask questions, I'm going to have time tonight to look at them for you. You can text me 303-912-9110, or if you're logged into live stream, you can type it in, or of course you can email me, support@tatoday.com. I'll pick those up, take a look at those for you, and if you don't have questions for me, I'm probably going to digress and go into something else, which you may or may not want to hear. So if you want to hear something you care about, ask me a question. Emerging markets, real quick here. Emerging markets trade down. They're doing a retest regen. That will be something else to watch tomorrow. FXE still can't break down any farther. Looks like it's going to bounce. Gold. Gold test up into that little zone. It still isn't into this this big bar yet. Almost, but not quite. So gold probably going to try to test that tomorrow. Although it will be dead tomorrow. But the big news out here, again, bonds break out over the top. Another ABCD structure to the upside. And it's almost finished. Yeah, it's almost finished, or probably is finished as of tonight. Probably see another pullback, a little doji up there. So what's the summary? Summary to me looks like this market's going to go sideways up again tomorrow. And that's on Friday. It's going to be dead after probably 2 to 3 hours, and it's probably going to hang there. I would not be surprised to see a little pressure in the morning, and then it comes back again. That would be my guess. Okay, so lead into the question that was texted to me, had to do with GDX. Let me pull that up here, and let's see what we got. So GDX, of course, is the gold miners index, and the question was, or had to do with potentially doing a short on this. So let me get the text up right quick. And it says, can you give your opinion on GDX? No position yet. Looking to go short at 26.5, which is a 50-day moving average. Well, surprise, surprise. I don't even know where the 50-day moving average is. Stop at 27. Okay. And it's at 26.46. So you're almost exactly where you want to be, right? Okay, so let's think about what we got here. Okay, so the first thing you have, you know, and we kind of talked about this in a different way, is you have these two ranges, right? And matter of fact, the number you've happened to have chosen is right at the border between the two ranges. So if it's going to fail and stay in this lower range, this is where it's going to do it. If it's going to get in the higher range, this is also where that's going to happen, one or the other. So that's the first thing to note. You don't have and you want to put your stop at 27. Well, I think your numbers are sound. I mean, your stop should be somewhere about, you know, 27, and that should hold it. And I don't know if you're looking, I don't know if you remember or not, I can't tell, but if you're looking at the TA Today charts, that's also what they're telling you. So the top of that zone is 26.93. You put you know, 20% of the ATR on it, that's probably going to give you about 27. I'd probably put 27, you know, 04 or something just above it. Now the question is that a good trade? And it looks to me like this is just a range trade. And the reason for it is you had this low. It was a retest regen, right? So it breaks under it, and then it immediately comes back up and retests it and gets over it. So the fact that it's over it tells me more than likely we're in some sort of a range trade here. Can we come back to the bottom of the range? Sure. And so I guess I'd give it a chance in the morning. You'll know in the morning if it's going to try to lift or not. And if it fails there, you can put the trade on. The only thing I dislike about this trade is, I mean, you can, let's take a worst case scenario against you. Let's say we have a long weekend, war really breaks out, and gold jumps like crazy on Tuesday. This thing's going to jump like crazy as well, and your stop may not really be at 27. It may end up at 20, you know, 27.5, 27.75. So I think that's the risk you're running with this kind of a trade. You're right in the middle of the range, so you know, although you're putting your stop lower, the probability of getting stopped out is higher as a result of that, instead of putting it over the top. So in other words, if I were going to put my stop, if I were doing this trade, I'd want my stop at over the highs, Because if it breaks out up here, I know I'm wrong. If it breaks here, I don't know that I'm wrong. I hope you understand what I'm saying. And I realize you can't put a stop up there because the reward risk doesn't make sense. But you know, that's the danger of putting it here, right? You've got a higher probability of getting stopped out, even though the trade may still work. In other words, this thing may work its way right up to here and then turn and come back down. And then of course you wouldn't be there. So that's always, you know, that's always the risk of putting on a trade that's kind of in the middle of the range. So I think there's probably better trades, but you know, I may work, may not. I'm not particularly crazy about the trade. I'm actually bullish on gold also. So you know, and right now I see a range trade here. Okay, let's see what else we got. So no other questions? All right, well, let me give you a larger picture view of where we are in the last 10 minutes or so that I have here. And I want to use the monthly chart of the S&P 500 to do that. So let me pull this over and let me pull up the general markets and grab the S&P 500. And as you know, the S&P 500 has been one of the most bullish ones all the way up. So I don't know if one of the most, they've all been bullish, but this one's particularly bullish because we're gonna transition on Monday to the new month, and that new month is going to put 6 bars between us. So if I count these bars, if you take the algorithm that I've laid out that all these concepts are built upon, you're going to see 1, 2, 3, 4, 5, 6. Your lowest low is going to be here, and you're going to have 6 bars past it come Monday. So the result of that is that this bar is going to print as a low. So you're going to have a swing point low on this bar. Now, we already know that we're overly extended in terms of our positions here. 96 on the weekly, almost 90 on the monthly. There is going to be a reset for these at some point. I haven't seen it this bad since the 2000 debacle. In other words, when we ran up and up and up in 1990s, and that last thrust that lasted for about 3 years did the same sort of thing with these numbers and just took them up, up, up and would never let them reset. That's where we're at. That's the sort of market we're in, and you can see it here. Just a straight up market. And if you pull up a longer term, and let me get this off here, if you pull up a longer term view, and I'll put it on the S&P 500 as well, and we go back and look at the 2000 era, and I'm going to pull it in like this, that looks very similar to what we're looking at today. Oops, wrong one. To what we're looking at today. Not quite as deep, right? Not quite as, not quite as just straight up, right? Because this went straight up, and then here in the 98, this was that Asian crisis, right, with long-term capital management getting hammered, and that was a big one, and then it just went off again. But we never got a reset, and these things got extremely extended on the way up. And they didn't reset until you got way up here, and that's 10/2 of 2000 on the monthly. That looks very similar to the sort of thing that's going here. Now, this has gone on for, what is it, 3 years now? 1, 2, yeah, about 3 years. This went on for 5 years, folks, almost 6 years. Well, 5 years. And then that was the top, and then on the 6th, you actually got the reset on the monthly. You got it faster on the weekly, but here we're looking at the monthlies. So when you consider that, this thing can continue another year or two. I mean, it has done it before. Is it going to give us that kind of a run to where it just continues up and up and up? I don't know. We don't know those things. What we do know is that there's a good possibility that we're going to get a reset as a result of this thing being as stretched as it is. Now the angle of ascent here is a little bit more than 45, but it's not horrific, right? I mean, it's not terrible. The angle of ascent over here, when it was in this, this mode, was a little bit steeper, right? That's a little bit steeper than what we see over here. Well, I'd have to get back to it. Let me go find it again. So the angle of ascent there versus the angle of ascent here, I'm going to keep them on the same. You can see the difference. So you have a situation where this, if it just wants to keep climbing, can go just as long as it did before in that odd case that we had in the 90s, right? Where the Fed truly engineered an infinite up. The history is never the same, and the situation that we have now is certainly not the same it was in the 90s. In the 90s, we had interest rates at higher levels, and they were able to lower them to make things happen. Well, now we use QE to do that because we can't lower interest rates anymore. Matter of fact, we talk about raising them now. So can we get that kind of performance over that extended period of time with this new instrumentation that we're using? I don't know the answer to that. I do know that so far QE has greased the liquidity and continues the money that's put into the system as a result of quantitative easing. A lot of that has made its way to the market. In loans, in whatever it is, whatever form it's taken, it has to be in these markets. Now you're starting to see the economic picture improve. It could give us another 2 or 3 years. Because we don't know that, it's important not to forget this, to remember where our swing points are and what it would take, but to lower our time frame to something that makes sense. And what makes sense is for us to continually look at the weeklies, because the weeklies are where we're going to see the deterioration first. You're not going to get a reset on the monthly without the weekly resetting first. It can't happen. It will not happen. Now it can happen that they line up at the same point, but you have to get both of them. Usually you get this one first. That's why you watch the weekly. And so right now the weekly's way back here, 1868. If we hang up here another 2 to 3 weeks, and that's possible, it will print up here at 1902 or 1904, almost 1905. But this is where the reset's going to come first. And the worst case scenario is where you pull a bunch of these all at the same place. For example, if this were to come back and not let this print, in other words, we get a deeper retrace initially, the swing points down here. So I'll just draw on here some examples, right? Let's say we pull back over the next 2 weeks in a very strong manner. War breaks out in Ukraine with Russia, and Europe goes in with NATO. I don't know. I mean, there's all kinds of things that can happen, right? If that happens, this market plummets, yet it doesn't take out this swing point low, then all of a sudden everything gets better and it goes back the other way, right? You could get a situation to where now you end up with that scenario, right? If you come back down again, now you've got a low here, and now you've got 2 lows together. And when you get multiples on this time frame, that's when it gets extremely dangerous. And so you can envision the kinds of scenarios where that could happen. Right now we don't have anything like that. And until we get something like that, it doesn't really matter. But that's the sort of thing I always look for, I'm always aware of. And if we go back if you remember, at the beginning of this year, that was the scenario in the Russell, and that was why we were worried back in April. You had a low here, a low there, and a low. Well, you actually had these three at the time. These three lows all were very close together. If you break them all, and we got very close to it, that could have led to a large cascade down, and you can see that scenario set up. What happened though? Draghi comes in. I'm gonna take rates to the moon, and what do? Back the other way. And this is not the first time it's happened. That's happened about 4 times now over the last 4 years, where it looks as if we're getting close to the breakdown, and then some central bank somewhere, whether it's Japan, whether it's the US, whether it's Europe, they come out, protect the system. That's what they always do. What will happen at some point is that will fail. They won't be able to swing and keep the balls in the air anymore. It's what happened in 2008. It's what will happen somewhere down the road. It's not there yet, folks. Right now, it's bullish. I'm going to cut out. You have yourself a great weekend, a long weekend. I'll see you on Tuesday. Thanks for joining me. Take care.